Hello everyone. In today's video, we will talk about the Bollinger Band strategy, and we will see how this strategy achieves a high win rate when it is used on some markets and currencies. As you can see here, this is the Bollinger Bands indicator. It consists of three lines, the upper and lower bands, and the moving average in the middle. And these little arrows here are to show where to buy and sell. For example, this is the buy signal, and here we sell, here we buy again, and here we sell, and so on. This seems so cute so far, but what is the win rate in this strategy? In this strategy, the win rate may reach more than 93% in some markets, and as you can see here, it has reached 93.5%. Also, the drawdown rate is considered very good. But as we know, testing a strategy on one market or one currency remains weak and may not work with the rest of the markets. For this, let's see the test results on something else, and let it be the Nasdaq Stock Exchange. Well, here the win rate reached more than 83%, and even the drawdown is not considered very high. Let's see more, and this time, let's check out the Apple shares. This is also good, the win rate is about 81%, and drawdown is also excellent. Let's also see how it works with Dow Jones. Here we see that the accuracy has reached more than 91%, and the drawdown is considered good as well. But let's see more, and let's try it on CFD. The win rate is 100%, and this is unreasonable, yes, because here it was tested only 3 times, and it was successful on these 3 times, which gave us this percentage. And as you can see on the chart, these are the 3 times that the strategy entered and exited the trades. Excuse me for the many examples, but I try to cover as many possibilities so that the video is clear. So let's try it on US dollar against Canadian dollar. Here we find that the percentage has decreased a little, and this is what we will talk about in a few minutes. But here, we find that the win rate is also varied, reaching 93%. And this is the fact that lies behind the backtest, as it may change from market to market and from one currency to another. All previous tests were tested on 1-day frame, but what will happen if they are tested on the most common frame, which is 1-hour frame? As you can see, when changing the frame to 1 hour, the win rate decreased from 93% to 83%, the drawdown increased a little, and also the number of closed trades reached 134, and that means we tested this strategy 134 times. Even with dollar binaries, the win rate decreased to 68%, and the number of tests increased to nearly 200 tests. And here, on 1-hour frame, the win rate also decreased, and this shows that the backtesting of strategies depends on 2 things, the type of market or trading binaries, and the time of the frame. And to find out more, let's see what happens with Bitcoin against US Tether. The winning rate is more than 68%, and it may be satisfactory, especially since it has been tested more than 150 times. But with all this, the big problem remains here, in drawdown, because the high percentage of this drawdown may cause very large losses. But the question is, what is the drawdown, and how do we determine it on the chart? Well, let me find a clear example to explain. Here we find an entry signal, but we find that the exit signal was late, and this is considered a drawdown, but it is very small, so let's look for another example. And here, we find that the entry and exit was successful. Here too, it was a successful entry and exit, but we are not looking for this, we are looking for an example of drawdown. Well, this is what we are looking for. Here, we find a buy signal, but we do not find an exit signal close, and after all this downtrend, without a stop loss, the exit signal appeared. And of course, such cases are what caused the high percentage of this drawdown. After we have learned some important information about the Bollinger Band strategy and learned how to read it in a simple and general way, let us dig deeper and apply this strategy manually so that we can use it properly and also eliminate that bad drawdown. But before we start implementing our strategy, let's see how this strategy works. Here we see several red candles, and we see that these candles are closing outside the lower band. In other words, these candles have completed and ended outside the Bollinger Band's indicator. As this line here is called the lower band, we see a large part of their bodies, and also their shadows under this band. After that, we see this candle here, we see it closed above the lower band, or we may see that more than 50% of the candle's body is above the lower band. And when these simple conditions are met, this strategy will show a buy signal, and the entry point will be here, at this candle that closed above the lower band. And it will take profit until the candles touch the upper band, then a sell signal will appear. Here too, we see that the candles were below the lower band, and when the first candle closed above it, another buy signal appeared. And the profits continued as well until the candles touched the upper band. Well, that's how this strategy works, but how can we use this strategy better, and how can we get rid of drawdown? To do this, let's open the indicators box and look for the normal Bollinger Bands indicator. And let's hide the strategy, we don't need it anymore. Open the indicators box again and look for the KDJ indicator. Choose this one, which was created by Collins. Now open the indicator settings. Change the period to 25 and leave the others on 3. Then to the style and remove the first and second color. Also remove level 100 and level 0. You can change the dashes into lines and you can leave it as you like. You can also change this color to any color you want. And these are all the settings, and the most important of which is the period, that should be on 25. In the KDJ indicator, this area will be the overbought area, and this area here, it will be the oversold area. When the green line moves from the oversold area heading upward and crosses the 20 line, it will be a buy signal, as we can see here. And also here. And when the opposite happens, it will be a sell signal. This is how to use this indicator, but we will not use it to enter, we will use it to confirm signals only. And to find entry signals, we will apply the same principle of strategy, but with a slight difference. Well, there are 2 ways to enter. The first way will be through the regular candles, and the second way will be according to the green hammer candles, as we explained in previous video. In the same way, when we see that there are candles that have closed completely or partially by more than 50% of their body below the lower band, we wait until we see a new candle that is closed above the lower band. And this candle must be green, so if it is red, we ignore it and wait for the next candle. After that, we draw a line above this green candle and wait for it to be breached by another candle, and it is better that it be small. Well, here the breakout appeared. Shall we enter? Yes, but first, we must see confirmation from the KDJ indicator. And as we can see here, the confirmation has already happened, so we can enter. This was the first way. As for the second way, it will be through hammer candles and the like. Let's take an example of the hammer candle. Here we find a green hammer candle, and it must be green, and not red like this one here. Also we find that its entire body is under the lower band, which makes it a sign in itself. In this case, we will place the line directly above it, and we will not wait for a green candle to appear above the lower band as we did in the first example. But we still have to check the KDJ indicator, and if we find confirmation, we enter directly above it. Here we find a red hammer candle, and a large part of its body is below the lower band, so we will treat it as a normal candle because it is red, and we will wait for a green candle to appear above the lower band. And this candle here will be the target candle that we will enter above it, but when we check the KDJ indicator, we find that it is in the overbought area, and in this case, the entry will be cancelled. To learn more about this fall signal, let's use the replay tool to make it clearer. Now we will wait for the breakout, or at least 50% of the candle body does the breakout. Now the line has broken, but when we see the KDJ indicator, we see that it is in the overbought area, and this means that the entry confirmation has been cancelled. Here we find green hammer candle below the lower band, so we put a line and wait for the confirmation of the KDJ indicator. Here we don't find a hammer candle, but we find another candle below the lower band, so we wait until we see a green candle above the lower band, and then we put the line above it and wait for the breakout and confirmation from the KDJ indicator. The KDJ indicator confirmed the signal, but the candles did not cross the line, and all candles here are still below it, and this means that it is another false signal. Here is also a green hammer candle below the lower band, so we will put the line above it and wait until we get confirmation from the KDJ indicator, and indeed, at this candle here the confirmation has taken place. Well, all these examples were in the downtrend that occurs during this period, but when the general market trend improves, the signals will be more accurate and more profitable. This strategy works well on the long position, but it is difficult to use it on the short positions, and if you want to learn and practice on this strategy, you can find the code and download it from our Telegram channel, which you will find in the description below the video. Finally, thanks for watching, and don't forget to subscribe. Good luck.